of who the participants are in this environment. If you see higher volumes, that's typically an indication that there are larger institutions, which is giving you a better feel with the higher the volume, probably the stronger the trend. So taking a look at the volume numbers in the New York Stock Exchange, you have 278 versus an average of 350 million shares traded so far. So we're a little bit off on New York. But on NASDAQ, you have 844 million versus 795 on average. So you actually have the NASDAQ volume up on the day, New York down. You're also seeing that decliners are outpacing advancers on both New York and on New York, you're seeing, on New York and on the NASDAQ now. And you're seeing new highs outpacing new lows. Now, with that being said, let's take a look at the four major indices that I just discussed and kind of give you some context on the type of ranges that you could be looking at, as well as some critical levels that we want to keep an eye on throughout this trading week and going into next. We want to take a look at the NASDAQ, NDX. I'm going to use the cash settled index. Right now, for the next 10 days, a range is being priced in for this large cap tech index, the NASDAQ 100, of around 77 points. That's about 1.5% either to the upside or to the downside. Now, to put this into context, is this a big range or is there an anticipation of very large moves? And that range I gave you is basically about one standard deviation on the NASDAQ, either up or down, over the next 10 days. The implied volatility, which is that forecasted number that's utilized in the options pricing, that gives you an idea of expectation of moves. And then when you see an IV rank that I'm about to give you, if it's in the lower end of, on the scale of 0 to 100, if it's on that lower end, that's telling you there's not a heightened expectation of big violent moves. But as that starts to move up, that means the expectation of big violent moves either up or down in the underlying, well, that could be increasing. Right now, the implied volatility rank on the NASDAQ is at 18.26%. That's low. That's also telling you, for those of you that are option strategists, specifically if you are option sellers, you're having a tough time trying to find ideas where you feel that the risk reward is actually working out in your favor, or at least putting probabilities in your side as far as the risk capital you're putting out there. Now, critical levels that you want to keep an eye on in the NASDAQ, in the NDX, 49.33, 48.52, and 46.69. Those are going to be the areas that you're going to want to focus on if this current trend to the upside is going to keep its legs. You will see the short-term trend come under pressure below 49.33. The midterm trend will come under serious pressure at 48.52. You're going to want to then understand what the catalysts are for those right now. SPX, that's the cash settled index on the S&P 500. Right now, the next 10 days, the options are pricing in the SPX, that index that tracks the S&P 500, of about 30 points. So that's basically a 1.3% range that's being priced in either up or down over the next 10 days in the S&P 500. Implied volatility, and again, that forecast of potential violence, very low. The rank is at 10%, actually specifically 10.64%. We're going to watch three critical price levels right now, 2262, 2200, and then 2142. Those are going to be critical areas that are going to need to be held if, in fact, the trend is going to continue to the upside. Now, a challenge of 2262 and getting below that would be relatively healthy. It gives an opportunity for those that have not been able to get into this market actually start to position to take advantage of an upside mood. A print below 2200 or 2207 on the S&Ps, now that could be challenging. That could be meaning that the momentum could be shifting to more of a bearish stance. And then you're really going to want to understand what the catalyst is for that. Now we want to take a look at the Dow Jones 30, or in other words, the DJX. I'm going to use the DJX, that's the cash settled index on the Dow Jones Industrials. Right now, for the next 10 days, the options are pricing in the DJX, which is trading right around 199, a range of $2.70 or 1.3%, either up or down for this index that tracks the Dow Jones. It's actually 1/100th of the actual Dow Jones Industrial. Now, the implied volatility rank on this is at 19.24%. Still very cheap, but it is higher than the other indices, so you stay on your toes on this one. Plus, it's only 30 stocks that make up this index. So critical levels that you're going to want to watch: 198.72, 192, and 183.5. Those are going to be critical levels that are going to need to be held, especially the 192 and the 183.5, if in fact the bulls are going to continue to the upside. Finally, we're going to take a look at the Russell 2000. That's smaller cap, high beta stocks that are domestically centric here in the U.S. Very sensitive to the economic components here in the U.S. The Russell 2000 right now is pricing in, the options are pricing in a range of about 2.2% for the next 10 days. That's about $29 on the RUT, R-U-T. Now, the implied volatility rank is at 18.4%, still relatively low. Critical levels you're going to want to watch on this one: 1371, 1314, and 1215. Those levels have to be held, especially 1314, if the bulls are going to continue to catalyze to the upside. Now let's take some names, look at some names that have relative strength going into the midday, and then we're going to wrap all this up. Relative strength to the upside, gold. You can look at the gold futures contract trading at 1183.60. It's up 20. Basically, it's up a decent amount today, and it continues to catalyze, looking to try to capitalize, getting above that 1200 mark. The options right now are pricing in on the gold future the potential range, basically over the next 11 days, or 14 days, of around $26 in gold. So it has the potential to challenge that upside level. That's catalyzing other metal names, specifically gold names, like the junior gold miners. We've talked about this. GDX pricing in the potential of around a $3 range for the next 10 days. Implied volatility is at 95%, so that's really high. And as a matter of fact, you're going to want to watch on this $37 ETF that tracks junior gold miners, the small gold miners, 32, 35, and 39. Those are going to be areas that you're going to want to watch, especially the 35 level and the 39 level. 39 is broken. That means that long-term resistance has now been superseded. That means that the bulls could be taking action here. You're going to want to watch that, especially if gold does catalyze to the upside. That could mean that there's other underlying factors behind the scenes that are going on. In other words, a potential flight for safety. Silver miners have also been on the move for the last week or so. SIL pricing in the range of around $2.92 on this $36 stock. Australia has been on the move with this movement in the commodities and specifically in the miners. EWA is up 1.3%. Right now, pricing in a 51-cent range for the next 11 days on this $21 underlying ETF that tracks Australia. And finally, that's had relative strength to the upside has been the semiconductors. SMH is the ETF that tracks it. Right now, pricing in an 11-day range of $2.11 on this $72.84 ETF. That means you could see it as high as 75 or as low as 72 and some change, or 70 and some change. So we'll keep an eye on semis. That's a very impressive move, especially with the move in silver. That's telling you that with silver and semis going up at the same time, watch that tech sector. That tech sector could be getting a little bit of a catalyst to the upside. Relative weakness, nat gas. Nat gas with the warmer weather looks like that is anticipated here in mid to late January. Down 4.8%. Right now over the next 4 days, and the reason why I'm pointing out 4-day range is because we're going to have a report out on supplies. We'll watch that very closely as we get closer to that report on Thursday. But a 41-cent range is being priced in for the next 4 days in UNG that tracks nat gas. That's a 5% move being priced in the $7.77 UNG ETF. And then finally, we have U.S. gasoline down about 2.7%, and then the British pound down about 1.7%. We're going to want to watch those currency markets. All right, folks, that's it for strategy right now. Giving you some context, giving you some thoughts, some ranges, some ideas about particular strategic approaches now that you are thinking through the different ranges and opportunities that are out there. So join me at 3:30 Eastern Time, where I'm going to give even more context, where we talk more technical and actually narrow it down even more specifically in Tech Talk at 3:30 Eastern Time. Till then, have a wonderful trading day and check out the archives here at MarketStream.live. Take care.